Hi, I'm Kara Murphy, and this is Money with Murphy. Let's talk about inflation. Rising prices has been a prominent subject of debate and consternation. Just 2 years ago, prices for everything from steak to gas to sofas were rising at a pace not seen for decades, eating away at Americans' take-home pay. Since then, with help from higher interest rates delivered by the Federal Reserve, those price increases have abated, though not quite to where policymakers would like them to be. So the first question is inflation really that high? The answer is not as straightforward as you might think. Going back to the 1950s, consumer price inflation, or CPI, has run about 3.7% on average. But since 1990, those rates have been much lower, about 2.5% on average. Last week, the latest measure of consumer price increases was reported to be 3.3%, so not so bad or not so good, depending on your reference point. Suffice to say, inflation is much better than it was, but not quite where many of us would like it to be. So the second question is, does it really matter if inflation is high? Most consumers will say yes, it matters a lot. When having the price for milk or having your pants hemmed increases, consumers naturally have to spend more of their paycheck on those items or services. If wages aren't increasing at the same pace, then those consumers simply can't buy as much as they used to. Higher inflation is likely one reason why consumer confidence remains relatively low despite strong economic growth, plentiful jobs, and a stock market at new highs. Continued high inflation also matters because of how policymakers respond. Federal Reserve officials have publicly targeted an inflation rate of 2%, and they've argued they need to see more consistent progress toward that goal before cutting interest rates. Last week's CPI data was an important step in the right direction. So the final question then is, what happens next? The latest CPI report may hold clues as to where inflation is trending. Two of the largest contributors to faster price increases were auto insurance, up 20% year over year, ouch, and shelter. While housing costs only increased 5% from last year, those costs make up a large proportion of the overall index. Interestingly, a host of other types of items saw prices decline, including apparel, used cars, and airline fares, which were down notably. There's broad consensus among economists that inflation will continue to abate, though disagreement comes over just how quickly. The Fed is betting that price increases will slow enough to allow them to begin cutting interest rates for the first time since 2019. While inflation is likely to continue to moderate, Fed officials may have to adjust their long-term target for inflation from 2% to something more in line with the longer-term average of about 3%. The good news is that we've had healthy economic growth before, even with that somewhat higher level of inflation. So until next time, invest wisely and live richly.